Welcome to the Retirement Guide Podcast. I'm your host, George Jameson, owner of Capital Wealth Group, a flat fee only advisory firm. Whether you're nearing retirement or already retired, join me each week as we explore the world of retirement planning and equip you with the knowledge and tools you need for a successful retirement. So let's get started. Today we're diving into the topic that's very important, especially for our senior listeners: why investing in gold IRAs may be a ripoff. You all have heard and seen countless ads on the radio, TV, social media, etc. about investing in gold IRAs. These scare tactics / ads make it sound like a no-brainer. And given the run-up in gold lately, I hear more and more ads everywhere. However, I have some major issues with these types of IRAs, and I'll explain in detail. It's very disheartening to acknowledge that some seniors are being taken advantage of when it comes to investing in gold IRAs. And I want to be clear, I believe it's okay to own a little gold, and I believe in owning an IRA for retirement, but I do not believe in owning physical gold inside an IRA. And in this episode, we'll explore why. But let's differentiate between owning gold and gold ETFs and investing in a gold IRA. While I believe in the merit of owning a small portion in gold, like I said earlier, and investing in IRAs for retirement, I don't believe owning physical gold in an IRA is a prudent decision. So first, gold IRAs often come with significantly higher fees compared to traditional IRAs that invest in stocks, bonds, and ETFs. These additional costs include buyer fees, retirement account setup fees, custodial fees, storage fees, and cash out costs. These costs can add up, and they raise the bar for how much the gold needs to appreciate for you to realize a profit. And even worse, overpriced metals and coins. There are even some fraudulent precious metal dealers who charge exorbitant markups, commissions, and fees on gold and silver investments, making it nearly impossible for some investors to profit. Standard custodians like Charles Schwab, Fidelity, Altruist, and others do not allow you to hold physical gold in an IRA. You can own gold ETFs, but not physical gold. Physical gold held in an IRA must be stored in an IRS-approved depository, adding to the overall cost and complexity of the investment. If you want to include physical gold in your IRA, you'll first need to set up a self-directed IRA and then find a custodian that specializes in self-directed gold IRAs. A quick online search for self-directed gold IRAs will provide plenty of options, but these options often come at a large cost. And number 3, counterparty risk. Owning physical gold in an IRA eliminates one of its key advantages: mitigating counterparty risk. If you need access to your own gold, owning gold in an IRA involves contacting the custodian, filling out forms, and navigating a bureaucratic process just to get what's rightfully yours. And number 4, tax considerations. And given that gold doesn't generate income, it doesn't offer tax-saving benefits if it's owned in an IRA. Similar to traditional IRAs, the value of a gold IRA will be subject to taxes upon withdrawals. In addition, for those seniors aged 73 or over who are required to take RMDs, selling the gold to meet the R&D requirement could become an unnecessary hassle and expense, adding another layer of complexity. Then number 6, gold as an investment. Gold, in my view, isn't an investment in the traditional sense. It doesn't produce income, does not pay dividends, or increase in value like a stock or bonds do. Its valuation does respond to long-term inflation and uncertainty risks, such as the devaluation of currency or geopolitical tensions. But I'm not here to tell you whether you should own gold or not as part of a diversified portfolio. However, most financial experts recommend limiting your gold investments to no more than 5 to 10% of your overall investment portfolio. It's rare to find an unbiased expert who recommends putting a substantial amount of your investments in gold. And then number 7, a better alternative. If you really want to own physical gold, it is best to own physical gold outside an IRA and store it in a safe, assuming it's a very small amount. If you have a larger amount, I would recommend a safety deposit box at a local bank. You can get a small safety deposit box at a local bank for about $50 per year. However, you still need to be aware of the markups when you buy physical gold. You will see premiums on gold bars and coins with a large range from as low as 1% to over 50% compared to the spot price of gold at the time. If you do decide to buy physical gold outside an IRA, for 1 ounce gold bars, you can find premiums less than 2% over the spot price. For larger gold bars, you can find the markup around 1% due to economies of scale. Then number 8, if you want to own some gold in an IRA, there are less expensive and easier ways to buy and own gold in a traditional IRA through a traditional custodian like Schwab or Fidelity. There are a few low-cost gold ETFs available, tracking the spot price of gold. These options provide a simpler, more cost-effective, and much more liquid approach for those looking to include gold in their IRA. You would probably want to do this on your own to avoid ongoing AUM advisor fees, or find an advisor who is willing to open a separate IRA at no cost and no charges, and invest a small portion of your overall investments in the gold ETF as a complimentary service. If you already have a financial advisor, he or she should do this at no cost, assuming you have the remainder of your investments with them or pay an ongoing planning or flat fee. So in conclusion, investing in these gold IRAs you hear about and read about is not a good idea in my opinion, especially for seniors. It's crucial to be aware of the potential pitfalls and true costs and consider alternative avenues that align with your financial goals and circumstances. So that wraps up our discussion for today. As always, do your own due diligence, seek advice from fee-only fiduciary financial advisors, and make informed decisions for a secure financial future. Thank you for joining, and have a great day.
Thank you for tuning in to this episode of The Retirement Guide. If you enjoyed this episode, please subscribe and leave a 5-star review to help others discover the show. For questions, ideas, or discuss your retirement plan, reach out to me, George Jameson, at Capital Wealth Group. Visit our website at capitalwealthplan.com to learn more. Thank you for listening. Stay tuned for more insightful retirement planning in future episodes. And now for the disclaimer. The information discussed in this podcast is for general explanations and education only. It is not tax, legal, or investment advice. Before considering acting on any information heard here, first consult with your tax, legal, or investment advisor. Thank you and have a great day.